While retail investors were selling XRP in fear, institutional money kept buying. That is not an opinion. That is what the latest capital flow data is showing. And it may be one of the most important developments in the XRP market right now. Because while headlines focused on price weakness, something very different was happening beneath the surface. Money was moving. Not retail money, professional money. The kind of money that usually arrives after months of research, analysis, and risk assessment. At the same time, some of the largest XRP holders on the network continued accumulating, not reducing exposure, not moving to the sidelines, accumulating. That creates a serious question. Why are institutions and whales increasing exposure while much of the market remains uncertain? Because if they are seeing something the broader market is missing, the implications could be significant. The media often gets one thing wrong about financial markets. It assumes price tells the entire story. It does not. Price is important, but price is only the result. The real story is what happens before the result appears. Who is buying? Who is selling? Who is entering? Who is leaving? And most importantly, where capital is flowing. Right now, capital flows are telling a story that many investors are ignoring. The public conversation around XRP remains dominated by short-term volatility. One week investors become optimistic, the next week they become pessimistic. Every price movement becomes a major headline. Every correction becomes a reason for panic. But sophisticated investors rarely think that way. They understand that market structure matters more than daily fluctuations. And market structure is exactly where things become interesting. Recent reports indicate that XRP-related investment products continue attracting capital. This is happening during a period when many investors expected the opposite. In other areas of the crypto market, some investment products have experienced pressure, yet XRP continues showing resilience in institutional demand. That should get attention. Not because institutions are always correct, they are not, but because institutional capital follows a process. Large funds do not make decisions based on emotions. They rely on research, risk analysis, market positioning, long-term expectations. That does not eliminate mistakes, but it does mean that significant capital flows deserve serious consideration. This brings us to the first major point. Institutional demand is becoming increasingly difficult to ignore. For years, many institutions approached digital assets cautiously. The risks appeared high. Regulation remained uncertain. Market maturity remained questionable. Many preferred waiting. Today, the environment is changing, gradually, not overnight, but steadily. As digital assets become more integrated into the broader financial system, institutional participation continues expanding. XRP appears to be benefiting from that trend. Recent inflow data suggests that investment products connected to XRP continue attracting interest from professional investors. That is important because institutions generally think differently from retail investors. Retail investors often focus on recent performance. Institutions focus on future potential. Retail investors react. Institutions position. That difference matters, because major market opportunities frequently emerge when positioning and public sentiment move in opposite directions. And that appears to be happening now. While uncertainty dominates public discussions, institutional capital continues showing interest. That divergence deserves attention. The second major point involves whales. Large holders continue accumulating XRP. This may be even more important than the institutional story, because whales directly influence market structure. Every time a large holder accumulates XRP, available supply becomes slightly more restricted. One transaction does not change everything, but thousands of transactions over months can. That is exactly what investors need to understand. Markets are shaped by trends, not isolated events. And the trend here is clear. Large holders have continued increasing exposure. This accumulation occurred during uncertainty, not during widespread excitement. That distinction is critical. Buying when everyone feels optimistic is easy. Buying when confidence is low requires conviction. Conviction usually comes from information, research, experience, or a longer time horizon. Whales often think in years, not days. They are not trying to capture every short-term movement. They are positioning for larger opportunities. That does not guarantee they will be correct, but their behavior provides valuable information, because capital leaves footprints. And right now, those footprints point toward accumulation. The third major point combines both stories. Institutional demand and whale accumulation are occurring simultaneously. That combination is what makes the current situation unique. Either development alone would be worth monitoring. Together, they become far more significant, Because they affect both sides of the market equation, demand and supply. Institutional inflows support demand. Whale accumulation influences supply. When both forces move in the same direction, market dynamics begin changing. Not immediately, not always visibly, but structurally. And structural changes often matter more than temporary headlines. Most investors spend too much time watching candles, too little time watching ownership. Yet ownership determines who controls supply, and supply ultimately influences price. This is basic economics. If demand increases while available supply becomes increasingly concentrated, pressure can build. That does not mean price must rise tomorrow. Markets do not operate with that level of simplicity, but it does create conditions that investors should monitor carefully. Because major market moves are often preceded by structural shifts, and those shifts usually begin quietly, before headlines notice, before social media notices, before the broader market notices. That may be exactly what is happening right now. Consider the psychology of the average investor. When prices become volatile, fear increases. Investors become defensive. They seek certainty. They reduce risk. That reaction is understandable. But professional investors often behave differently. They understand that uncertainty creates opportunity. Not always, but often. When fear dominates, assets can become mispriced. That possibility attracts sophisticated capital, and sophisticated capital appears increasingly interested in XRP. Again, this is not a guarantee of future performance. It is simply an observation of current behavior. But behavior matters. Actions matter. Capital allocation matters. Because money tends to reveal conviction more clearly than words ever can. The broader implication is that XRP may be entering a period where ownership structure becomes increasingly important. Not just price, not just sentiment, ownership. Who holds the asset? Who continues buying? Who continues accumulating? Those questions may become more important over the coming months than many investors realize. And that is where the story becomes truly interesting. Because if current trends continue, the gap between public perception and professional positioning could widen even further. History shows that such gaps do not remain open forever. Eventually, markets choose a direction. Eventually, price begins reflecting underlying reality. The question is whether current accumulation trends represent the foundation of a larger move, or whether the market is still waiting for another catalyst. That answer remains unknown. But one fact remains difficult to ignore. Institutions continue showing interest. Whales continue accumulating. And both developments are occurring while many investors remain focused on short-term uncertainty. That combination deserves attention. Very serious attention. Because markets rarely reward those who arrive after everyone agrees. They reward those who identify important trends before consensus forms. The coming months may reveal whether this accumulation phase was simply another chapter in XRP history, or whether it marked the beginning of something much larger. That is the question every investor should be asking right now.